Joining me now is the SBI Chairman, C.S Setty. Sir, thank you very much for joining us. You came out with a very good set of numbers with respect to credit growth and deposit. But your deposit growth is lagging behind the credit growth. Do you see that catching up during the end of the year?
Thank you, Sajid, for having me on your show. The lag between credit growth and deposit growth has to be seen. What is the liquidity available to a particular bank? SBI has almost 4 lakh crore excess SLR today. So we don't aggressively price our deposits. For us, deposit is a franchise activity, and as far as the wholesale deposit is concerned, is a treasury activity. So while 18% credit growth has been there, we didn't have any funding concerns because we are able to fund through our treasury. Having said that, if you see our savings bank current account has shown a phenomenal growth, and even on the retail term deposit, 14.4% growth rate year on year. So there's no concern on the gap which is emerging, but I think the gap would probably be narrowed with the FCNR flows coming in this quarter.
What would be that narrow? What will be
so we are seeing around, as we speak, around year-on-year growth rate of 10.6 to 11% now.
Okay, and you're also moderating the full year credit growth to 14 to 15%.
Yeah.
Is that because of the base effect which is going to come in this third?
One is the quarterly numbers are a little, you need to take the base impact also into account. But I think the credit growth has to be seen from the lens of GDP growth rate. And we always gave our guidance based on what could be the nominal GDP growth rate. And our house view is around 12% is the nominal GDP. And we have been growing 2 to 3% over the nominal GDP. That's how the guidance is worked out, 14 to 15%. Sometimes, a renewed economic activity in any of the sector will probably push more than this level. But broadly, I think is appropriate to give this 14 to 15% guidance.
You came out with a guidance on NIMs of 3%, and you met that in Q1, and full year you maintaining the same. With FCNR coming in, the cost being low, and it's going to replace some of the high cost bulk deposit for you, will there be a push up to NIMs as well?
No, for us, we don't have very large significant portfolio of bulk deposits. And if you are expecting 1 lakh crore flows FCNR, 60 lakh crore deposit base. So what matters? This is not really going to push up or push down. So my assessment, at least for SBI, different from different payers, that it neither would have a significant negative impact nor a significant positive impact.
Sir, your loan deposit ratio is at a healthy level, and you're saying that it can go up to 80%. If that happens, what kind of impact do you see on your NIMs as a result of that?
I also mentioned in my opening speech is that we will pursue the growth, but growth with profitability and growth with asset quality. And if I'm checking those two boxes, I think we will grow. The 80% is an outer limit with the potential for the balance sheet to have that kind of CD ratio.
Yeah.
But as we ramp up our deposit rates and deposit growth rates, I hope that it still will be a modest CD ratio for us in the range of 74 to 76%.
You've been able to garner around 6 odd billion through FCNR and through another billion through the overseas borrowing which came in.
Yeah.
What is the kind of target that you're looking at for the entire year? You still have two odd months to go for that. Do you think that you'll be able to double that from that point of view?
We don't have any specific target as such, but based on the levels what we have achieved now and the visibility of the inquiries, the customers, what we are reaching out, we believe that around $10 billion would be a level which we can definitely reach before September.
What was heartening to see is the lower provisioning, credit costs coming down for you, as well as the slippage is also coming down and lower than street expectation. Do you see slippages or credit cost coming down below 50 bips by the end of the financial year?
No, our credit cost guidance always has been below 50. We were the lowest now in this quarter. But I believe that the yearly guidance also will still stick to 50 basis point credit costs. I mean, lower than 50 basis point credit cost guidance.